Well. Welcome and a tip of the cap to you. And thank you for joining us here on the Pilot Money Guys podcast, where we're talking about flying and finance. This is Flight 84 today, and we're going to cover activist investors. I'm Major Airline Captain and Wealth Manager Robert Eklund, call sign Rubber Mallet, and I'm joined by our Chief Investment Officer, the man with two first names, former F-18 Navy fighter pilot and chartered financial analyst, Andy, the VizCap, Christopher. Welcome, VizCap.
Hey, good to be here.
How
Excited.
are things out in California?
California is good as always. We're not in the heat dome, so that's good.
Oh, that's good, man.
Yeah,
Well,
yeah,
now tell me something. Do you watch the Californians off Saturday Night Live? Have you ever seen those guys? You look in the mirror?
yeah. See myself? Yeah, I find it. Yeah, many of these California shows are not satires; they're just documentaries.
Real life TV.
Yeah,
Nice. Well, I'm coming to you from our family ranch here in Colorado, VizCap. You didn't know that. You probably guessed it, but I'm a fifth generation rancher here in
love it.
Colorado. I mean, you could tell that probably by my excellent
Yeah.
mustache and voice, but eighth
Belt
generation.
buckle.
Yes. I don't want to make fun of myself, but I am wearing an Academy belt buckle. I'm like, I haven't won any actual belt buckles, not even come close,
Yeah.
but I'll wear that one. So, we got a couple of horses, a couple of cabins, so we're excited about that. But
Yeah.
I felt pretty cool the other day, Andy. We landed. I can't remember where we're at. I think Phoenix, and I told my FO, I was like, I'm gonna go talk to a man about a horse, which usually it's good for the captain to run off and just mess around for a bit. But I was actually calling
Yeah.
a guy about a horse.
Talking about horse. Yeah.
It was pretty special there, I felt.
Excellent.
Well, let's jump into it. Aviation news. We got a little bit of an issue here. I guess Boeing found itself in the hot seat, or the CEO found himself in the hot seat. This was reported here, Simply Flying. And basically, they said Boeing CEO David Calhoun had a tough day at the Senate hearing on Tuesday, and I think this was last Tuesday, facing questions about the company's performance, as well as angry comments from the friends and family of the victims of the two fatal 737 MAX crashes a few years ago. And among the tough questions thrown at him were Boeing's safety record under his leadership and his yearly compensation. Calhoun also admitted that the company retaliated against whistleblowers. So a lot of consternation there. I think it was reported, if you have some better numbers, Andy, throw them at me, but I think it was reported his yearly salary was $32.8 million, something like
Yeah.
that, obviously with some bonuses in there.
The number that I remember, and I think you're correct though, is $62 a minute. I think was someone did the math. So yeah, I think anytime you have both sides of the aisle coming at you, things are
Yeah.
not going well for you. Things are not going well. That's going to be a wound that's going to take a long time to heal from some of those Max accidents, and certainly some of the news coming out, frankly, since then has not helped to
No.
prepare that. So
No, and I think he came in after. Well, he came in after those
Did,
crashes and was supposed to fix some things, and there's maybe quite a few people that aren't too happy with him about what he's done so far. So I think
Yeah.
he's getting replaced at the end of the year, is what I've heard.
Yeah, they got to find somebody. No one seems to want to take that job.
Ooh. Are you available, Andy? Is that
Yeah. They haven't called yet. My phone is off silent.
I mean, for
So,
32.8 mil, I'll consider
Yeah.
it. But
Yeah, what is it? Best job in the world's a fired CEO. You know?
yeah.
Like sometimes you hear about these packages, these golden parachutes, and you're like, that sounds great. Sign me up.
Okay. Yeah, I guess if I have to, I'll do
Yeah.
it. Yeah. Well, good stuff. Let's I'm going to do a quick commercial break here actually, if that works for you.
Is it for a ranch?
It's for grass-fed beef. Don't worry about it. This one, a quick commercial break so Andy can fix his beautiful hair, which he had to postpone the podcast to get fixed. But you're looking good, Andy.
Yeah.
Looking
thanks.
sharp.
Yeah. Gotta keep it.
This podcast brought to you by Leading Edge Financial Planning. Your money and your values, can we couple them? Heck yeah, we can. That's what Andy and I do and the Leading Edge team does. Give us a ring at 865-240-2292, extension 1. 007 for me, of course. And Andy, I don't know what your extension is. I tried to figure it out, but I think you have to hit 1 and then 2. Does that sound right to you?
I have no idea.
You can't reach Andy. He's unreachable.
I should figure that out.
It used to be 2 for Charlie, but we've redone it because we're getting fancier, I guess. But
Yeah, we are.
anyways,
Yeah.
enough of the stupid commercial breaks. Let's get to it. Questions from the flight deck, which is really our whole episode here today. And we're talking about activist investors.
Yeah.
What do they do? Some examples of what they've done. Who are activist
Can't imagine-
investors? Yeah.
Yeah. I can't imagine why that topic has come up.
Yeah. I don't know. It's weird. We just thought of it. What do activist investors do? Do they boost returns? What are their results? And here's one. If you're working for a company that just had an activist investor invest in your company, should you be scared? Tough questions here, but the soft
Or
ones.
excited.
Yes. Or excited. Yeah, exactly right. Kick us off, Viscap. What is an activist investor? Obviously, you come from this. Sorry to spoil it here. You come from this from a very unique angle because you've been not an activist investor, but you've been on the mergers and acquisitions front.
A little bit. Yeah. So I spent just a little bit of time at one of the big 4 consulting and their M&A advisory practice. I've seen a little bit, especially on the private equity side, kind of how they approach some due diligence. But, I think the big takeaway, if you're like, what's an activist investor? Or I work for a company that maybe just had a activist investor get involved is, first of all, they're trying to accomplish something. And how are they doing it? They're buying shares in the open market, right? So that would be different than, say, a full acquisition, right? Of like company activist investor comes in and just owns the whole company. That's not really what's happening. They're buying a large enough portion of the available shares to hopefully, right, is kind of the key word there, influence some internal changes in the company, right? So maybe that's like the first kind of thing to take away is this is not like, hey, activist investor, and now they come in, right, and change the CEO's, change the carpet in the CEO's office and the the furniture and where the setup, right? It's kind of it's a slow burn, right? It's a little bit of a slow burn.
It's funny you mentioned the carpet in the CEO's office because I may or may not have been a part of a Air Force organization where that was the first thing the general did was change the carpet.
It's important. It's how how you change the changing of the guard, right? You change your carpet.
That's right. Yeah, gotta get that right.
That's
really
right.
pulls the room together, I think, Andy. You gotta get that right. Yeah. A quick definition from Investopedia here. An activist investor is typically a specialized hedge fund, buys a significant minority stake in a publicly traded company in order to change it, how it is run, or some facet of the organization there. Activist investors' goals may be as modest as advising the company management or as ambitious as forcing the sale of the company, divestitures, I can't say that very well, 3 times fast for sure, or restructuring or replacing the board of directors, which you obviously have seen if you've been reading the news at all. And to your point, unlike private equity firms, VizCap, that buy and restructure the companies in order to profit when they're resold, activist investors seldom acquire a full or majority stake.
Yeah.
They don't need it. Yeah. They use,
I think
sorry, go ahead.
No, I was gonna say, I think in the most recent, right, we obviously, we'll stop beating around the bush here, right? Elliott, is now
What?
Yeah. What are you talking about? Elliott Investment Management, right? They've acquired a stake in Southwest Airlines, right? And so that was about a 11% stake, right? Just kind of give you a sense of, they own 11% of Southwest Airlines. Not insignificant, but again, that doesn't mean they now own Southwest Airlines, right?
Right.
They've got,
exactly right. And that's why this is a question I've been getting quite a bit, and I'm sure you've been getting. I know Charlie and Kevin have been getting. Did Southwest sell itself? Are we going to fold and go private? And that's not the case that we know of right now. So a lot of times they don't have the majority stake, so they can try to do some things, and it's such a fairly expensive company. I think the market cap was around 17 billion, 16, 17 billion last I checked. So they bought, 2.5 billion, somewhere in there, of the company, and they'll use public communications, and they have a whole public affairs team that they'll kind of deploy to start talking to the shareholders, perhaps, or company insiders. They'll just have discussions with the company insiders to affect that change. So they don't necessarily have to control it all, but that we're still talking about what are activist investors. We're going to get into what they do and how they do it a little bit. But anything else you want to cover there?
No, I think that's perfect. Kind of just what you said, right? There's ways an activist investor can go into a company and try to affect change, right? They can look at it from a governance perspective. So that would be board seats, right? So any publicly traded company should have an independent board that the CEO ultimately reports to, and they're in charge. Kind of one of their primary functions is monitoring and managing the CEO and setting the strategy for the company, right? And as you noted, right, Rob, M&A, spinoffs, and mergers and acquisitions, probably not what we're talking about when we think about kind of, Elliott, right? Or really strategy change is kind of that third,
Sure.
the third leg of the tripod, if you will, right? How can we increase profitability, right? This is maybe an underperforming stock relative to its peers. So it's kind of a true value play if you really think about it. Kind of back to that, like Warren Buffett, Ben Graham, kind of a perspective.
It's interesting, if nothing else, that is for sure. If for anyone in this space, anyone at Southwest or JetBlue or Disney, or take your pick, the activist investors have been out there in force lately, or at least they've been in the news more than they normally are, which is funny because Elliott, we're going to get to this later, but they're the biggest, baddest dog on the street, right? And most of the time, most people I'm sure have never even heard of them. In the living room, it's not, Paul Singer is not a household name, is my guess. So yeah, and that's not intentional. Now he is. Cat's out of the bag. What's funny, as I was looking into this, because I'm not super familiar with what they do, it was interesting. I came across several different names for activist investors, some of which are corporate raiders, obviously hedge funds we've talked about, but also vulture investors. Not a lot of warm, fuzzy feelings when you think about those.
Yeah, it doesn't have the right connotation, right? If you're a vulture investor, it's not how I want to be described.
No, thank you. So with that backdrop, what do activist investors do? We hit on a little bit, but a little bit more, Andy, what do you think about that?
Yeah, I mean, as you noted right off the bat, is there's ways they can try and influence the company. So they can do it, we'll call it peacefully maybe, and that's probably where they first start. They're the new 10% owner, and they get to sit down with management or the chairman of the board and say, here are some things that we would like to see as an investor who has a large stake, still a minority stake, but a large stake in this company. Here are the things we want to see, right? And so I think we've seen examples of that in the past where the company just says, okay, we'll nominate these individuals to the board, right? And so there's kind of like we'll call that a peaceful. So we're not in the vulture phase yet, right? Of how this works, but ultimately, if that doesn't work, then they're going to take probably potentially some more aggressive actions, right? And the number one way to do that is to secure seats on the board, or to nominate people that you think are going to help drive the change in the direction you want it to go to the board of directors, because then that flows down to picking the CEO and changing strategy internally.
And that's what I believe, that's what Icahn did to Carl Icahn, very big activist investor. Although I think we're talking, different zeros here between Icahn and Elliott, but still quite a bit of money, millions for sure, piped into JetBlue to acquire board seats there. I recently, the last I heard, correct me if I'm wrong here, Vizcap, but I think the last I heard, he was kind of backing off his position a little bit. So he might have looked in there, got the board seats, and not really liked what he saw. So obviously when you have more shares as a shareholder, that gives you more power over the board and the direction of the company. And if you back off, maybe he's saying, okay, I don't see, and this is one you brought up earlier, as, you know, not the same, but similar maybe with the M&A, mergers and acquisitions field, looking for those synergies or those ways to maybe cut some cost very easily and pocket it for the shareholders.
Yeah. Easy come, easy go, right? If you're Carl Icahn in JetBlue, yeah, I think he cut his stake down from 10% to 5%. There's no reading of the tea leaves here, what that, you know, truly means, except that he cut his stake down to 5%, right?
Yeah,
So,
yeah. I think he still has the board seats, but maybe they don't listen to him as much. That would be, yeah. That's kind of fascinating itself.
Yeah. You're right, though. You think about like, hey, what are synergies? So here's some insightful business thoughts here of the, you know, to improve performance, you either make more money or spend less of it, right? And so those are kind of the levers you have to pull, right? And so what are synergies internally? Well, if you think about the example that we would always look at is if you got a manager or a whole team of managers and they have one person reporting to them, like, well, maybe we've got some opportunity here, frankly, to shrink headcount, right, and to still be efficient. So it's looking at those sorts of opportunities, right? Those are the synergies. And really, when you think about synergies, you think about from an M&A perspective of, hey, two companies come together. I don't need two CFOs anymore, right?
Right.
Right.
Yep.
So that kind of trickles down.
I've got a couple of great examples of those. One is totally not in the business field, but it was in the Air Force. It was at Northern Command, and they decided they had NORAD and NORTHCOM, and they decided to merge all of the headquarters functions, with the exception of operations, which I think is telling. So that might be a backdrop or a little bit of a hint at what might happen with some of these companies going forward. But the operations, that both the threes, as you will, stayed separate. So the operations of NORAD and NORTHCOM stayed separate. All the rest, I think there was 9, don't quote me on that, they all combined. So to combine with those synergies. And then, of course, most people, I think, have heard of Bass Pro Shop and Cabela's. And I think a lot of people know that they combined. Well, who affected that change? I'm pretty sure it was Paul Singer and Elliott. Was the force behind that? And a little town called Sidney, Nebraska, which I believe was the headquarters of Cabela's, is kind of got decimated by it. So when the synergies happened, they combined. Obviously, Bass Pro and Cabela's do a lot of similar things, and they combined a lot of things. And poor Sidney, Nebraska, came out the loser on that end. So
not great.
Not a good opportunity.
But maybe good for the shareholders, right, of Bass Pro, right? So
could be, yeah. I haven't looked at the stock, but there's definitely some consternation and some growing pains or shrinking pains as it is.
Not on my ticker either.
Yeah, not quite there.
Yeah.
What else? Anything else that you want to cover when we talk about what they do and how activist investors change a company?
Yeah, I think it's there's two sides of this coin, right? And so you've got an activist investor that has a certain connotation, right? This vulture investor, corporate trader. But maybe a helpful perspective is to think about what about the other side, right? And so passive investors, right? Index funds like Vanguard, BlackRock, State Street, those are the big 3 index funds. Well, they have to go out, and if they're buying an S&P 500 fund, they have to buy every company in the S&P 500, including companies like Southwest. And so the other end of that spectrum is you think about they own, this is 2022 numbers, but 18% of stocks are owned by these passive investors. And so there's some criticism there, right? From what makes a good corporate governance? Well, the owners should have a say, and the owners, right, or the shareholders should have a say in how the company is run and have an informed decision. And does an index investor that Vanguard, that doesn't really unlike a Elliott, doesn't really have a perspective on the share price, right? They just
right.
Southwest is 2% of the S&P 500. I don't know what the real number is, but I must go by 2%, right? And so is that good governance, right? And so that's kind of the other kind of flip of the coin from just a governance perspective and stock ownership and what it means to be a shareholder. We're so used to being passive shareholders that we just look at it from an investment perspective, but it truly means ownership in the company, right? Those are owners of this company.
This is one I'm just throwing at you because we talk where you put some articles out there, and obviously we've talked about this in the past, or at least Charlie and I have, with some of the proxy voting. You own a piece of the S&P 500, and you own a piece of these 500 companies. How is it that your investment gets voted, and through Vanguard and BlackRock or whoever you have, State Street, you have all these different index funds out there. How do they vote? Because to your point, they own a huge share. I don't know, have the numbers in front of me. I think you might have had them there, Andy, not to put you on the spot.
Got it. Vanguard, this is of March 31st. This is Southwest Airlines, right? So Vanguard owned 11.29. State Street 6.7, BlackRock about 5.6%. So those are some big numbers in terms of ownership, right?
Yeah.
But to your point, right? If you have the proxy voting, which is just, and if you go on Southwest or any airline, any publicly traded company, their investor relations website is going to have their annual proxy vote, their binding proxy votes, which are, hey, we need to nominate so many individuals or reappoint so many individuals to the board of directors, to CEO compensation. Non-binding, like, hey, we really wish you would do some of these ESG things, but they're all things that you vote on, right? From a proxy vote perspective at the annual shareholder meeting. And Vanguard gets to cast 11 point whatever percent.
That's a huge number
of their vote. Well, if you're Vanguard, you charge 0.03%. Like, what is your internal capacity to manage all of these companies that you own?
Yes.
And to make informed decisions, right? And that's not me making a criticism. It's just, that's sort of a just kind of
the way
a fact,
it is.
right?
The way it is.
Exactly, right? Like you don't really have I'm sure someone on Vanguard was listening to say, well, actually we do, but
right. Yeah. But to your point, that's a lot. Yeah,
exactly right. And to be frank, some people have said, well, that's not really fair. If me, right, I own a share of the Vanguard S&P 500, maybe I should get a vote. And there's actually some laws that have been proposed, right? I think it's the Index Investor Act, right? That says, no, you've got to pass those proxy votes through the actual owner of this fund. In other words, that Vanguard 11% gets distributed out to
the millions.
The 401k. Yeah. Good luck figuring that one out.
Oh gosh.
Yeah.
I'm pretty sure the fees might go up for that.
Yeah. So more to follow. Yeah.
Yes.
On that one. I don't know if that's a good solution. But
yeah,
it's definitely out of that criticism that these passive investors and frankly, some of their more recent kind of positions. And so you think about political spectrums of what the positions they've taken. I think there's some who have kind of taken umbrage with that, if you will.
Yeah. Well, that's a great segue right into our next question, which is who are activist investors? And speaking politics, you can't speak politics without talking about maybe the number one activist investor right now, at least the number one household name, which is Bill Ackman, and his bid to replace the college administrators over, the crisis in the Middle East there. So very interesting. Obviously, you got Carl Icahn at JetBlue, Nelson Peltz and Disney, and obviously Paul Singer and Southwest. Those are just a couple when you're starting to take, who are these folks? And usually they're huge hedge funds. They're wielding tens of billions of dollars, and they can be very strategic and tactical at the same time in getting what they want, and maybe even a little bit ruthless in the way of Elliott.
Yeah. When you put $2.5 billion into something, that maybe sharpens the spear a little bit.
Exactly right. I'm going to butcher it, but this story kind of shows the lengths that they'll go to when they do some activist investing, and Paul Singer in particular has a pretty notorious track record, I'll say, for being an activist investor in bonds of countries. So I think he first, and I'm going to butcher some of these terms, but Peruvian bonds. He invested heavily. Well, he had to take him to court, and I think he fought for years, maybe even over a decade, to do some of this stuff. I think the longest I heard was 14 years he was suing some of these countries. But he bought some bonds from these countries, Peruvian bonds, and wasn't able to get the money he wanted out of them. And I guess a lot of times when people buy country bonds and those countries aren't doing so well, they'll negotiate and say, well, these are just made up numbers. You owe me $10. I'll take $8. It's fine. I know you're trying to do some things for your kids who aren't able to eat. Well, apparently Paul was not happy about that. And he said, nope, I want $10. You owe me $10. I'm going to get it. Takes him to court. They're in court in New York. And apparently there was a law being the operative word there, that used to say, hey, you can't sue somebody. You can't buy bonds with the intent to sue him. Well, he unfortunately said that in the courtroom. I think one of the few times Paul Singer was actually in the courtroom, he said, yeah, I'm going to sue you. Well, the law came into place. And so he went about, and he and his, company, and I don't know how much of this is true, but he came about to help change the law so that he could do that. And while he was doing that, he bought some Argentine, I don't know, some of those bonds from Argentina. Yeah. And went so far as, and just, you'll appreciate this as a Naval Academy grad for sure, Vizcav. They bought the bonds, again, same deal. They weren't able to pay. So he went around and he got the Ghanaian government, Ghana in Africa, he got them convinced that, hey, they owe me money, seize this naval vessel, their naval flagship that sails around their naval cadets at the end of, I think when they graduate there, sails them around the country. Very cool. But it's, I think you said, what'd you call it? A tall boat or something like that? I don't know what that means.
Yeah. The tall ships.
Tall ships. What does that mean?
Big mast.
Big mast. Yes.
Yeah. I think picture a master and commander, right? It's got the, got the cannon sticking out the side is what I'm picturing right now.
That's right. Yeah. I like the cut of your jib. That's all I know.
Yeah.
So he went so far as to get the Ghana government to seize the ship. And I think I'm probably butchering this a little bit too, but the law of the seas kicked in, and they basically, guns were drawn on the ship when they tried to seize it. And eventually they were able to, they did not seize the ship. The ship was able to leave and go back to Argentina, which there's a big fanfare. They're like, oh, we beat this big bad, activist investor. But I think he eventually got his pound of flesh in the end. So replaced.
He didn't get the boat.
Didn't get the boat though, or the cadets.
That's what matters.
That's right. So that's a little bit about who these people are. What else you got on who these activist investors are?
Yeah, I think it's probably worth taking a look at, like, what do they target, right? And maybe this gets into a little bit of like, what are the returns? But certainly companies that are targets of activist investors have generally underperformed, right? Like, you're not going to go in and buy a company like NVIDIA, that's the biggest company from a market capitalization standpoint currently, right? Like, there's probably not a lot of meat on the bones there, right? For you to get, right? So a common target is, these are, quote, solid companies with underperformance, right? Just as we said earlier, like, this is kind of your true value play. And they have lower sales margins, right? Kind of those, compared to those industry benchmarks. And so it's really, and you think about like Elliott, when they decide they want to go put $2.5 billion, they've got to go to their investment committee and say, here's why we think we can get a return above and beyond, just putting this in treasury bills and getting 5%, right? And so they've got to make that internal justification, and then frankly succeed on it, right? So they've got $2.5 billion now invested, and kind of remains to be seen, right? If that'll be a profitable investment or not. And of course, they are able to do things they want to do, right? First of all, question one is, can you affect the change you want? Question two is the change you want to affect even going to be effective, right? And those are kind of those are unknowns, right?
Unknowns, yep.
Wall Street Journal today talked about, and I'm going to use Southwest again as an example, right? Those diehard fans who just love the business model. No check bag fee, no seating, right? But those are big ticket items in the airline industry.
Yes.
That have a lot of revenue, right? And so those are going to be the things, I'm sure, the discussions that are going to be, if not already had, are going to continue to be had.
Right.
In the
Yeah,
boardroom.
it's going to be interesting if nothing else. You know, there's obviously a lot of activist investors have been successful. I
Yep.
think, well, I don't think. I read that Harvard said that most of the time they fail. Now, what is failing and how do you determine that? That's a whole other discussion. But, you know, obviously in the Carl Icahn example of JetBlue, he was able to get a couple of board seats. Will
Yep.
Elliott, I don't know. Peltz with Disney, totally lost. You know, Bob Iger and Disney rallied the troops and said, we're going to fend you off. And they successfully were able to at least defend the board position. Now, you know, Peltz turned around and was able to say, well, we did win because we affected change with Disney. They now are viewing how they do business differently than before we invested and tried to get those board seats. So what's a win there? That gets a little fuzzy, but I think it is clear that whether they get board seats or not, they're going to try to affect some change. And most of these companies, because they maybe weren't performing the way they were, you know, years ago or underperforming now, they're going to probably be already looking to reorganize or restructure to some capacity, charge for more bags or charge for bags and seating assignments and those kind of things. So I think change is probably afoot, and you know that's the only constant in the world. So nothing surprising there. Even if you know, to me, part of this, and I'm skipping ahead to that last question, should I be scared, is a little bit, you know, well, we expect change on businesses. That's why, you know, as wealth managers and financial advisors, we talk about your risk and how much money do you have in that company? Because as great as a lot of companies are, they're not bulletproof. As we could go through the list of companies that have failed that were once great companies. So that's something to think about. We always think about change, and this isn't anything new under the sun per se.
Yes. Yep. Exactly right. Exactly.
That's right.
Can't agree more. Maybe we'll go back. You know, I think the question you said earlier was just, you know, returns, right? And Harvard did their study, and you know, are these successful or failure? You know, to your point, what is a success? What is a failure? It gets nebulous. I think if you're someone putting, again, you know, substantial money into a company, your success is what was your rate of return when you exited that.
Yes.
Exited that position, right? So Goldman Sachs did they did a study. This actually came out in May of last year. Looked at about, you know, 1,100 or so activist, you know, stocks targeted by activists, right? So 12 months prior to this activist campaign, right? Then, you know, all these companies had negative returns, right? But that's kind of like, as we already talked about, like that's the reason, right? That's you know, they had, and this is relative to the Russell 3000, so the total U.S. stock market. Now, you see kind of a little pop, right? So right when they announce, the stock price moves a little bit to the up, maybe 2-3%, as investors get excited about, oh, this stock that has, you know, been underperforming. Now we've got this new lightning rod, this Elliott, right, or whoever is in there. Now, as you get further out along the line, you know, and I'll use the 24-month, a little bit of a different story. The median is actually negative 12 or 13%. Negative 12 or 13% relative performance. The average is actually positive at about 6%. So what does that tell me when you see medians and means different? Is there's probably some big pops in there that really drove the average. But if you look at it from a total number standpoint, then it's, you know, underperformed to probably, I would really maybe call statistically insignificant or difficult to determine, you know, whether this is going to be a successful outcome from a stock performance perspective.
Yeah, and some of those big pops, to your point, Andy, have been with Elliott. Matter of fact, I think they're the biggest assets under management activist investor or hedge fund in the world at over 60 billion. Fact check me on that, folks. If I'm wrong, drop me a note. But I think they're pretty darn close to that arena of 60 billion, which means they have a whole heck of a lot of money they can use to affect change in a company. And it also means they've been very successful. And I'm sure I know they've had some of those pops Argentina being one of them. They got their
Yeah.
money back. So, AT&T, Samsung, a lot of very interesting stories. Google it. There's South Korean, politicians that went under because they were so scared of Elliott, and they've basically been able to affect the change and make some money to the tune of they've got 60 billion to play with there. So very interesting to say the least.
Yeah.
Anything else on who activist investors are? And then we've kind of already dived into it, their results. So anything else on the results side there?
No, I think it's probably, and we've already touched on it, is what does this mean for me, right? If I'm
Yes.
an employee, right? And what
Yes.
should I be doing something different? Should I be loading up on company stock? I don't know. What do you think? What do you think?
So this is what I think, and I had to write it down. So, and this is kind of this is what I was going to call it, and I was going to pass this by you before we got here, but I'm going to call it the good, the bad, and the meh of activist investing, and it could be good, bad, or meh. I think a lot of times, you see some of these things play out, like Disney or JetBlue, and it sounds like it's going to be all this interest and excitement, and then it kind of turns into meh. I don't know. It's about what they probably would have done anyways had the investors not done something. But sometimes, like Argentina, it's a different story. When it comes to Elliott, they're known for its activists. They're very successful, and they seek to influence the company's management and operations to unlock value for shareholders. That's what we know, right? So it can be good, it can be bad, it can be meh, depending on the perspective and where you're at in the company. For a lot of folks in the operations world, I want to say because of the pilot shortage that I think is still out there, relatively young pilots are out there, and folks are still hiring. I would like to think that we are still relatively safe. We can't say it because I don't know. They could cut us tomorrow, but we could have been cut, tomorrow anyways. The nature of the airline business, which is why we foot stomp emergency funds, and having that year or 6 to 12 months of emergency savings is so important because airlines furlough. We know that. And if they could do that, I want to say we're in an environment where that's not likely. Obviously JetBlue got through Icon's bid and they have folks on the board. I don't believe they've furloughed, and I don't think that's in their plans. So it could be a meh. I think keep watching. We know that the reasons to be concerned. We know they use aggressive tactics. We know they use cost-cutting measures. They're short-term focused. That's one of the things. A lot of these activist investors, they're worried or they're concerned or they want the share price to go up, and they can do it in the short term. I think Elliott has shown that they can play the long game a little bit more than most. So they might have a longer term focus, which could be good because the reasons to be optimistic, improved performance, which means, profit sharing. A lot of, I've had this a couple times from clients where they're like, I used to get a big old bump in the first quarter. What happened? I'm like, well, that's profit sharing. You don't get it. We haven't gotten as much as we used to. So that could be there. Market confidence, reason to be for optimism. If folks really think Elliott, and we saw the bump, right? We already saw once they announced the 2 billion or 2.5, wherever it falls there, we saw the bump in the stock price. Now it's come back down to reality a little bit, but over time, if they're able to affect some change, maybe start doing some of the things that they want to do, maybe that's a bump in the price. And obviously they're going to bring a lot of expertise and a lot of resources to the company that maybe the company didn't necessarily have. And it's regardless of what they end up doing, I guarantee you that the company is rethinking a lot of things that they're doing and putting a lot of focus that, it's not necessarily Southwest by any means, but any company that has an activist investor, they're going to be relooking at what they're doing to make sure they're doing the right stuff.
That's right. Yeah.
So,
I think I like it. I like good, bad, meh. You don't know. If you're an employee of this company, you just think, your human capital is tied up extensively, right? That's your paycheck. And so how much more do you want? This is for the, hey, should I go get and participate in the employee stock purchase plan because the share price is gonna take off? Like we just don't know. We don't know, right? And I think the data supports us in that conclusion. But to your point, Elliott, Elliott was was aware and made the point in their own presentation of like, yeah, from an employee perspective, like this could be good. You could get a better profit sharing payout, annually, right? But this could be a short term play, right? And like any stock investor, there's nothing preventing you from selling all of your shares tomorrow, right? These are
Right.
secondary shares on the stock market, and this is not like private equity with illiquid private assets that require a lot to get, to have an exit, right? That's the nature of a highly liquid capital market is you can just go in and sell your shares, right? Carl
Right.
Icahn did it, sold 5%.
Yeah.
So there's some, there is some short termism there, but I think the meta message for, the if you're concerned as an employee, it's, continue to do things you're doing, right? Hopefully it works out. There's really not much you can change beyond that. And, I can't make any specific recommendations about should you load up on, that
No. No.
any activist takeover, not really takeover, but campaign, right?
Right.
Is that a good time to buy? I think again, the data has suggested that maybe.
Exactly. A good maybe. And I love that you brought up the employee stock purchase plan. That's something that is obviously on the front of a lot of people's minds right now that are going through a lot of things. I think that that's something to think about. We just don't know. So
Yep.
maybe just keep dollar cost averaging. Don't put too much of your paycheck towards it because it's an at risk, it could be at risk. It's at the whim of the market there. And
right.
build up your emergency fund. Make sure, you should have that anyways, right? So these are
Yeah.
just,
Yeah.
blocking and tackling fundamentals that we want to make sure we have. But this might be the push you need to make sure, even as a higher time captain or whatever, you might want to make sure you have those funds filled, those buckets filled. So good stuff.
Love it.
Anything else, Ms. Cap? This is fun. What we'll have to do is we'll have to
Yeah.
circle back after the fallout and say,
Ooh.
oh yeah,
Yeah.
it was good, bad,
Yeah.
or meh.
Well, we're hoping for good,
Yes.
in all cases. Yeah, it's been fun. This is a good topic. In the news, for sure. Hopefully for those listening, it's been informative.
Yes, I love it. A couple of quotes to leave you with to ponder as you go about your day. The first one's from Sean Morrow, I think I'm saying that right, who does the Who Is podcast. And he said, working in law taught Singer, Paul Singer that is, that law isn't where the money is. Money is where the money is. That was kind of funny. And I'm not saying I agree with any of these quotes, by the way. I'm just putting them out there, something to ponder. And then this one is actually from Paul Singer. He said, resentment is not morally superior to earning money. And that is it. Let me be I know I got to think about that one. Let me be the first to welcome you to our final destination of Flight 84. Remember, as Emerson says, the world makes way for those who know where they are going. And as we say, so plan accordingly. From all of us at the Pilot Money Guys, we wish you smooth rides and soft in the zone landings.